Hi everybody, this is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Hey, good afternoon, everybody. This is Dennis Wilborn. This is the afternoon of April 27th, 2019. Welcome to this month's edition of the Art and Science of Active Trend Trading Update. Let's get right in. We got a lot of stuff to cover. We got a big Fed meeting coming up. We've got earnings coming up next week. And I want to highlight a couple of things for folks on this free video from the Active Trend Trader. All materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. I encourage you to stay connected through the end of the session, because I'm going to be showing you a potential setup on a stock that you may want to be trading into earnings next week. I want to remind everybody that, my objective is just to clarify, simplify, and multiply. That's been my motto since I began the Active Trend Trading service back in 2006. And my objective, we continuously work to clarify and simplify through refinement to the system. My goal is for the Active Trend Trading system to provide a top-notch objective system that is both easy to learn and profitable to use. Here's one of my favorite sayings. Most trading errors come from a lack of patience and compulsion, and a compulsion to do something even when nothing really needs to be done. And that's why we developed a rules-based mechanical system that helps eliminate the emotions such as compulsion, or the compulsiveness or the impulsiveness of trading, because that tends to get people in a lot of trouble. And why lose money you don't have to lose? That's the other question. So the Art and Science of Active Trend Trading update. Today I'm going to just cover on a couple of things. Check the indexes out, potential trade setup on Roku, and after the market, other market driving events this week, Fed, and more meetings. I'm going to highlight for you today one of the things that just really has been on my heart since almost the beginning of the year, and I've revamped strategy 2, which what used to be just a strategy that we would generate somewhere between $500 to $1,000 a week worth of just income, cash flow. I've adapted and adopted dusted off an old philosophy of compounding, but compounding with a strategy is what we're doing with this. I think you'll be surprised with how well we are doing it. We'll talk about that a little bit. Here's some of my mates from my flying days back with VA 25 out of Lemoore. The thing about it is you get where you depend on other folks to have your back, and that's what we like to do with Active Trend Trading. Here's a couple of things that we want to be taking a look at. One, the seasonality. One of the things, seasonality has not been working that well with the indexes themselves. Why is that? Well, one of the reasons is because the indexes have been kind of like going like this. No, not totally like that, but we've had a real jump through the first 4 months of the year. And normally the NASDAQ is kind of flat the first few months of the year. Then it starts catching its bid in April and runs to the end of the year. So are we going to get a significant pullback and then a rebound into the end of the year or not? We're going to see. Right now the economy is cooking on all cylinders. Pretty amazing stuff what's going on. Wages are going up. Things are looking really good. One of the other things I look at from a seasonality standpoint, one entity that is following kind of a seasonal type of approach is crude oil. And that's one of the ETFs that we follow with Active Trend Trading. As you can see, April, we did get a good run from February into April. And now it's time for, if with seasonality kicks in, to kind of move sideways through the August timeframe and then catch a bid from the end of July into August, September, into the early part of October. That's what we're looking at happen. One of the things we do with the active trend trading, for just a free portion of active trend trading, I encourage you to sign up, and even for just the free services that we do provide, is I roll together a composite of basically 13 different watch lists that the IBD, that Investor Business Daily puts out, and then I sort through those to see which of those shows up on the most watch list. The idea here is the more watch list a particular entity is on, the more it may become in favor with the institution. The institution is what really drives the price of these. As you can see, some top-notch names here now report, just went gangbusters here this past week with earnings. Palo Alto Networks, same. Adobe looking good as it's making its run up. And then Team did some really great stuff with earnings. And so out of this list that comes out on a weekly basis, I will basically put that onto the website for you to find weekly, so that you can basically have a nice sorted watch list based on stocks that have come out on multiple watch lists with IBD. Here's the thing I'm going to keep my eye on this week. One, Fed, this week, Wednesday. All the expectations are Fed's not going to do anything. But so when the Fed doesn't do anything, they met expectations. How they say they didn't do anything becomes important. So it normally takes Wednesday, Thursday. Wednesday they report out, Thursday to Friday to work out what's going on. Google has earnings, several things, big earnings period this week. Google has earnings, Apple has earnings, and that will basically take us just about through all the FANG stocks. One stock, Roku, has earnings. And then how we've been doing so far for the year. As you can see, strategy 1, we're up about 4%. Strategy 2 is where I've been really focusing on that compounding. What I basically want to do is I want to take a small account. Okay, we started this $10,000 is all we put into this particular strategy. It's up 71% since the beginning of the year. And we want to continue that, because my target is, well, we'll get to that slide in just a moment. But conceptually, here's what I'm looking at doing. I want to have one of the strategies offered by active trend trading for people with small accounts, okay? Or people who are, in their retirement days, or basically lost their nest egg because of the last, stock market debacle, or never had a nest egg, but they would like to start building one. How do you take like $2,000, $3,000, $4,000, $5,000, or even up to $10,000? Take that amount of money and then turn that into a significant amount of money in a short period of time without taking undue risk or unmeasured risk. And that's one of the things we're always working on, is assuring that whenever we take a trade, it has very defined risk and controlled risk. So our target for the total for our every year is to do about 60% win-loss ratio, return for the year, 40% for the whole account. We start with $10,000 in a marginable account. So over the last, since 2012, our average return has been 31% per year. But here's the power of compounding. Compounding is one of the strategies that are one of the things that have in kind of our modern days has been forgotten. And people really don't plan a strategy around how to do compounding. And I got to thinking to myself, okay, well, back in the day when somebody could get 5% to 10% on a CD, they would put $10,000 away with a CD, and they have to keep it compounded for, keep sometimes 2 years, 3 years, maximize. But every year they would compound on top of what they would compound. And so the earning periods, the compounding periods, so if I took 10,000 5% CD and put it away for 3 years, at the end of 3 years, I would expect to have how much? About $11,576. And you can see that $76.25 is what is added to the amount. Because if it was just a straight 5% on 10,000, it'd be $500 per year. But as you can see, it has jumped up to 11,000. So it's gained a little bit over $15,000 or $1,500. Therefore, it's compounded. By the time you get through 12 cycles of this, like 12 years, you would have, 12 to 13 years, you would have almost doubled your money. But one of the things that's so fantastic about what we have available in the market, we have means and tools to be able to trade so that we can take this 5% and shoot for 5% on a weekly basis. And so this just gives you an idea of taking $10,000 at the beginning of the year, and if I compound it once a week for 52 weeks, how much will that $10,000 grow to? As you can see, at the end of 39 weeks, will have jumped up to $67,000. At the end of 52 weeks, now this is where you just hold on to something, because at the end of 52 weeks, that $10,000 is basically exponentially increased up to $126,000. And I want to state right now, I am not saying that this is what is going to happen on this account that we're trading. However, by having a strategic plan in place and the knowledge of how to utilize the tools that the market is now providing us, it certainly brings the potential into existence. And so again, because, wouldn't that be a great way to rebuild your nest egg? Let's say you're 65, you're living on a single income, but you can scrap together $10,000 and you can learn how to do this system and have, that kind of a nest egg at the end of 1 year period of time. Would that help with life's issues? Or let's say you're okay, you don't need this, but you just want to take $10,000 and give it to your grandkids for a college fund. Well, imagine if they're 10, let's say they're 5 years old right now, they're not going to need it for 13 years until they're 18. And if you did this 5% per week for 13 years, the number for college, for what they would have ready for college is going to be, I'll just say, huge and more than enough. And so they can avoid all those nasty student loan situations. So here's how we're doing so far. Now, we missed a couple of weeks getting started at the beginning of the year when we pulled all this together, but here's how we're doing, and this is through Q2. For the first quarter, we were up approximately 27%. We started with 10,000, and by the end of the first quarter, we were up to $12,728, and we've continued. Here's our weekly objectives is 5%. Here's what our weekly returns have been: 7%, 10%, 7%, 6.5%. And so we just keep building. And so the strategy to growth year to date is $7,000. My target for this coming week is $857.85. Learning how to use this technique, wouldn't it be interesting? You get yourself up to, let's say, get your account up to maybe, $24,000 or maybe $50,000, but you use the same tools and same potential to then just start doing that on a regular basis, generating 5% every week. Wouldn't that be kind of interesting? Because it would basically be, you'd be generating 5% on $50,000 is $2,500 per week. And that would be a nice chunk of additional income to help us as we go into our later days. Hey, one of the things I just want to remind everybody, and we'll come back to the slide in a little bit, if you're watching this video, I want to thank you very much for what. Please, give us some thumbs up, like it, send on, recommend it to your friends, especially folks who would like to build up a trading account. I think the strategic compounding that we have going on with Strategy 2 will definitely be of interest. And the thing about it is we keep it really simple for folks, be of interest to everyone who would want to get involved. Anyway, here you can go and become an active trend trading member. And we do monthlies or we do quarterly memberships. And right now you can save 40% off of that. Go to that website, and here's the password, SAVE, save, and that's all. That is case sensitive. So, hey, let's take a look. I want to show you a couple of things that are setting up going into next week. And Adobe is not one of the ones we want to look at, but I will basically leave you with a couple of stocks that you may want to be positioning yourself for. And that one is Roku. Okay, Roku basically, here it is on a weekly chart. As you can see, it is a newer stock. It's only been, it came public back in, September 2017. It worked its way up, came back down, worked its way back up. And it has some just fantastic runs here. Here, a little bit over a year, years period of time, it went from $30 up to a little bit over 70, almost $77. It's done the same thing here. But look what's happening right now. We have earnings that are coming up on the 8th of May. And if Roku pulls back down into the midsection, from the midsection of the candle for the day, so somewhere between $62.20 down to, let's say, down to approximately the 20-day moving average at $60.65. Anywhere in there, you could target to get into this trade. If you drop below the 50-day moving average, you'd want to be jumping out of it. But a really nice setup for a potential earnings run. And if you only take advantage of the earnings run, okay, if we basically just jumped on a trade somewhere about the midsection of that candle or right at the moving average, there we go, and it ran up to back up to its past highs, you'd be talking about somewhere between a 15 and approximately 20% gain, and that could happen prior to earnings. And so that's the setup we've got going there. I'll leave you with that. That's what we're looking at in trading going into next week. And again, I just come back to the essence of if you want to basically jump on board with us active trend traders and become a premium member, learn what we're doing with that strategic compounding strategy, just go here and join us. And so, as always, trade wisely and profitably. Mahalo. God bless everybody. This is Dennis signing off. Have a great rest of your weekend. Aloha. And we'll see you later.